Hello everyone, today is Friday, July 10th, 2020. My name is Evan and welcome back to another market recap video. If you're new here, we break these videos up into two parts. In our first part, we're going to talk about everything that went on in markets this week. We're going to look at things such as performance and market internals, sectors and volatility, pick apart everything that happened and highlight the things that stand out. In part two, we're going to jump into the charts, put everything into context, and take a look at trends and where this week's action fits into the big picture. So welcome if you are new here, and let's jump into it. Taking a look at some of the top level headlines, or at least things that we find interesting. First is just the NASDAQ continues to steam engine to the upside, completely leaving in the dust pretty much every other stock. If you're not in the NASDAQ, you are not a performer. S&P 500, however, did hold its breakout level. It started to break out, or it continued, I guess, the breakout on Monday of this week, and it did manage to hold. We'll talk about that in the second half of this video. And earnings season is quickly approaching, starting, actually, it might even be next week, if not in the next 2 weeks or so. We're going to have earnings on deck, and be interesting to see how companies start to report and weather the storm that we are all in. If we next look at equity market performance this week, and we're looking at the right-hand column here for the 1 week performance, you can see it was mostly positive. The S&P 500 up almost 2%, NASDAQ up almost 5%, and look at the spread between the NASDAQ and the Russell 2000. Russell 2000 closed almost down 1% this week, while the NASDAQ was up. Shows basically, you know, stock picking does matter right now. The sectors and the names that you're holding will greatly impact the returns you are receiving. They are not uniformly distributing moves to the upside at this point in time. International markets are continuing to hold pretty well as well. You know, they've generally been lagging. They had a period of outperformance, and then they kind of seesawed back and forth, but international markets holding up pretty well. When we look at market internals, despite the fact that the Russell, usually you see a pretty strong correlation, small cap stocks, Russell 2000, very broad index there. When you see the Russell behaving poorly, you generally see breadth that lags, and we certainly did, particularly in row 2. If you're looking at the NYC cumulative AD line here, a net 300 on the week to the upside, while positive, certainly doesn't speak to you know, anything super stellar. It just basically tells you this same exact story, that you have a very narrow leadership working higher, and that's sort of the market environment we're in, and we have been in. In terms of number of stocks hitting new 52-week highs, that's a pretty decent number here. 314 total on the week. That's actually a good number to see. I'd like to see that again continue to expand to the upside, but all around pretty constructive there in terms of number of stocks making new 52-week highs. If we look at sector performance here, we're looking at that right-hand column again, 1 week performance. You can see things were pretty split. It was a pretty even take here. We had XLC, communication services, and discretionary and technology in the top 3 to 5% higher over the past week. On the downside, we had energy, we had real estate, we had industrials, anywhere from 1.5 to almost 5% down on the week. So it was a pretty split market there. Again, stock picking does matter. Now, if we look at volatility complex, the volatility this week did not change really whatsoever. The spot VIX basically stayed as is, and right down the curve, what we had for volatility last week is basically the same that the market was implying this week. So take from that what you will. Basically, you know what moved this week in terms of sectors and individual stocks, and basically the market's read on this is fear or expected returns are still essentially being priced the same way in terms of a magnitude risk here by the VIX. So that stayed the same. If we look at credit markets, they across the board were positive here. Just looking at the two common investment grade and high yield bonds, LQD and JNK ETFs as our proxy. Both of those did finish up on the week here, up about 0.5%. So no big flashing warning light there by the credit markets. And if we look at interest rates and commodities, pretty quiet story. We saw yields, but generally speaking, fall. Bond prices going higher. We saw gold higher. We saw silver higher. We saw crude oil higher, commodities in general acting pretty well. So that's sort of the landscape there when we look at interest rates and commodities. So the overall report card, things were quite positive. Equity market performance, while the Russell was a laggard, there's still generally enough breadth there to support it. Market breadth was good, internals were good, risk sectors did outperform. So the report card this week is an A- for the market. We did see enough things working as they should to support this market, to support this rally, and that's the grade heading into next week. Now, we always have been finishing off with our investment strategy, our trading strategy here at the Trade Risk, which is our Merlin strategy, open to free trials if you are interested. And there's a lot more information at the link below, thetraderisk.com/Merlin. But here's the current positioning. You can see we did get a little more exposure this week, had a new pickup, still primarily in the healthcare, or specifically really biotech side of things. Is where we're still kind of bunkered down. I think this makes up 8 different positions here, 8 individual stocks that the strategy is holding right now. You can see it's still pretty defensive, still pretty conservative, all things considered, but it does have its foot in the market, and it is participating and performing to the upside. So with that, let's take it to the charts. We'll be back in just a moment here with part 2. Okay, we are back here. We got TC2000 open. We are looking at our equity market grid, and we have our smart trend filters applied. Those are the colored dots on each of these graphs, basically looking at price and volume and some price action relationships to determine trend. Now, this is also a weekly chart we are looking at on all of these markets. So if we start at the top left, we're looking at the S&P 500. Basically, if we're looking at our trend here, nothing has changed. We're still seeing a bullish reading here in terms of our smart trend filter. Price is above it. Price was higher this week as well. So there was no change. Markets are higher. They're above this trend, which again is very stagnant here and very sideways. So it doesn't depict a very strong trend to the upside, but regardless, buyers have the benefit of the doubt, as they have had for the past 6 weeks. Now, if we look in the top right, NASDAQ 100, again, just, blasting off into the atmosphere here. Price itself really just getting some strong distance away from our smart trend filter here. It's quite extended in the short term. Nevertheless, momentum is there. The market is, corralling into the top 10 stocks that are basically driving this entire ship, and it continues to work. So nothing wrong with that. If it's working and that momentum is persisting, then that's an opportunity for us as traders. And really, that hasn't changed here in quite some time. NASDAQ has been in bullish trend. Russell 2000, bottom left, same thing here, bullish trend as well. Very weak, in fact, slightly declining trend here in terms of momentum, in terms of slope for our smart trend filter. Regardless, though, it is still a bullish reading. And in the top, in the bottom right, we have the ACWX, which is nearly breaking out to new, breaking above the prior pivot high here. So some constructive action there for international markets, all still positive in terms of trend reading. Now, if we go down to a daily chart, get a little more granularity here. S&P 500 was bullish coming into this week, and it basically stayed bullish as well. So you can see there was, of course, a few weeks ago, there was some hiccup and transition in here, a little bit of a slight false breakdown here also 2 weeks ago, a week and a half ago. But for now, bulls continuing to hold on and staying above where they need to. NASDAQ, of course, no change there. Bottom left is the Russell, and the Russell here you can see is still in the penalty box. We're still in this very sideways choppy action here, and again, the smart trend filter kind of picking that up. It's yellow in color, which basically means to expect some volatility or just some transition or mixed signals. That's basically still the case here for the Russell. And then in the bottom right, you have ACWX, which was bullish all week, staying above our trend filter and holding bullish trends. So those are kind of the outlooks there on the 2 different time frames. Now, if we drill down into the specific price action here, and we go down to the S&P 500, this is the roadmap that we've basically been using here. These are the same horizontal resistance lines that we've seen and support lines that we've seen on this chart now for many weeks. We know that this 3140 to 3130 band, this was where resistance was. Remember how many times we failed back here in early to mid June, and that was also where the island gap took place in the very start of the month. Well, now you can see that we broke above this level on Monday, right? So we popped above resistance. We had a breakout bar, breakout session on Monday. Then we had a a rug pull sort of Tuesday where we gave back the majority of those gains and closed weak. And then for the rest of the days here, we basically just ping-ponged back and forth between green closes and red closes here for the S&P 500, really sort of churning traders up and throwing misdirection in every single session. And ultimately, we closed here at the highs, back to where we closed on Monday, and holding above our resistance. So what we saw this week here in terms of this mini range, there's a few things to take note. I mean, the first is to simply say, let's certainly pay attention to how we open up on Monday, because we essentially just went nowhere for this entire week. We started the week off with a gap up, of course, but then we, throughout the week in terms of the trading sessions, we went nowhere in terms of carving out new ranges or leaving this 2% range here, or 1.5% range in the S&P 500. So for me, this 5-day sideways now sets up a move of expansion. We'll see which direction that comes next Monday. If we also think about just the placement of this consolidation, it is taking place over what was formerly resistance and now seems to be acting as support. So I think the bulls get a pretty good win here in the sense of they managed to hold this 3130 to 3140 area all throughout this week. And now with this strong close on Friday, we're set for some expansion here to the upside. It would support the move that we saw 2 weeks ago, or last week, I suppose. And it is also, of course, taking place over this level. So for me, the S&P 500, we've got the bullish trend backdrop. We've got some bullish price action developing over resistance. Both of those things suggest to me that the market wants higher here. Of course, it doesn't have to happen. There's no guarantees in markets. We're simply just looking at a sort of weight of the evidence approach of all of these technical indicators and some price action relationships. So, of course, Monday could start off with a gap down, and if we start breaking below 3130 to 3140, then this changes the analysis and this changes the landscape. And if we start breaking below this area, that's when I would pull my foot off of the gas and start to think that the market's in trouble in the short term. But until and if that happens, I think the benefit of the doubt right now is to the buyers. Next logical level is retesting these highs up here at 33. I'm sorry, not 33. What level is this? This would be 3230. That would be the next relevant high up here where we got to in early June. But there, to me, doesn't seem like there would be a tremendous amount of stiff resistance there. I really think if we can start clearing this, if we start getting follow through and this market starts continuing to the upside, really think our eyes are set for this bigger target up here around 3,200 to fill this gap from late February, early March. So S&P 500, good bullish developments there. If we look at the Russell 2000, things aren't so rosy, although the buyers did come alive here at the end of the week. What we saw this week in terms of performance for the Russell 2000 was a breakdown of the slope here, which I guess didn't really start on Monday. Monday we started with this gap up and we closed. Tuesday was the break, and then we basically chopped around for the rest of the week here. So we're still very much sideways and range bound. This is the most bearish of the major indices right now. 144 on the upside, 133 on the downside. Those are the relevant levels. We're stuck in the middle of that range, so there isn't too much to say except for try not to overtrade and get chopped up here. If we start breaking over 144, 145 next week, that would be the breakout area that I'd be looking for continued momentum. Finally, if we look at the NASDAQ 100 here, again, really just trading in its own sort of world. There's no worries in sight. The NASDAQ continues to ratchet higher. There's been zero selling pressure. Uptrend remains strong. It is quite stretched on most traditional metrics, right? So if you're looking back over 1 week or 1 month or even a couple of months at this point, if you're looking at any type of deviation from normal levels or average levels or general moving averages, you're going to see that things are quite stretched here in the NASDAQ 100. So caution is obviously advised if you're thinking about jumping into this market at this point. But if you're involved in it and you're trailing up stops, or you're protecting risk, or you're harvesting gains, or whatever you need to do to minimize risk from a potential pullback, I think that's the appropriate thing to be doing. Otherwise, trend followers here, momentum players, certainly getting a good piece of this and enjoying this ride to the upside. So congrats for everyone that is involved here and have been holding and weathering through some of this single day uncertainty, because we do have a lot of these single days sprinkled in, like we saw on Tuesday here, where we had this big outside reversal day. You close near the lows, and kind of everybody thinks this is the one where we start pulling back, and then of course no follow through happens, and then it ratchets it continues higher and rinse and repeat. That has basically been the MO here for the NASDAQ over the past couple of months. So that is the rundown there with some levels to look at for the major markets. Let's jump back into our trend filter view and go down the list here. If we look at credit markets, top left and top right, both of those pretty much acting the same. Investment grade bonds are in bullish trends, junk bonds in sideways neutral transition, nothing changing there. Bottom left is volatility. You can see getting a sell signal in volatility now, so the VIX going bearish trend on the weekly time frame, and TLT trying to continue its uptrend here. It's been bouncing around between bullish and neutral trend, still though price is above it, and you get some angling there, so things look pretty good overall there for TLT. And if we go down to a daily chart and all of these instruments, basically get the same picture on the top of the two charts. Bottom chart here for VIX, you got a little bit more of a mixed, nuanced, neutral picture here for our trend filter. And in the bottom right for TLT, you've got a nice bullish trend there. If we look at gold and silver on weekly time frames, both in buy signals here. If we look at oil in the bottom left, still a sell signal. And if we look at commodities here, we actually got a transition up to a buy signal for commodities, which is something we haven't seen in quite some time. And we have seen a pretty fast and sharp move off of the DBC off of the lows, and DBC is still a very oil heavy ETF. If we go down to a daily chart and all these things, you can see, just sticking with commodities in the bottom right, you can see commodities on the daily chart have been in a buy signal since May 18th. So if you were following here and looking at commodities from a trend perspective here, your first buy signal was down in the mid to lower 11s. You're now a full point higher. So that has been continuing to work. Same thing in the bottom left for oil, has been in a buy signal here basically since the middle of May. And if we look at gold and silver up top, that's still basically the same thing, bullish on the daily chart as well. Now, if we look at our sector grid here, it's a busy screen, but if we take a look at all our sectors, you can see basically what's been going on here on a longer term trend basis. There's not a whole lot of changes this week. Basically, everything's been kind of the same. You had a transition up in utilities and back up to neutral from bearish. Really, everything else is pretty much staying the same. If we go into a daily chart of our trend filters on sectors, you can see we've got more nuanced changes here. You got financials transitioning up to neutral. You got industrials going bearish. We have materials going neutral. We have utilities going neutral. So you've got some changes here, and I think really the best way is to just step through some of these in terms of the candlestick charts. If we look at financials here as one of them, financials went neutral on Friday, and you can see, they had a 3.5% up day, so our trend filter pushed them back up into neutral. You had a high volume day as well, and this was a much needed save here because we talked about financials just looking so incredibly weak around this 22 area, $23, $22 area in the XLF. But given the nice push up here and strong close on Friday, you've got a little bit of hope there. Now, of course, earnings season is going to be quickly approaching, and financials are always kind of leading the pack here or releasing their numbers first. So again, maybe the market's squaring up and getting ahead of, kind of squaring up before earnings. But these will be in close watch here as earnings season starts to come out. 2270 or so, that's the important level to hold on the downside. Now, if we look at XLI went bearish this week. Let me just double check that on Friday. Thursday rather, they went to bearish trend here. So if we take a look at the price action here, again, XLI looks similar to financials, where they were just kind of looking really weak in here, and you can see now that they are trying to hold on to this prior support in here from the 25th, around $67. It did go back into bearish trend. It hasn't broken down yet, so you got an early sort of sell signal here in XLI. I'm trying to look at what this level corresponds to. So this is a very old level that I think I was drawing out there in XLI, but basically you have in this recent price action here, you've got this low that it'd certainly be paying attention to, and of course you have a series of kind of lower highs in place, so you're waiting to see kind of how this resolves itself, but you get that early transition down. In terms of bullish looking markets here, consumer discretionary closing at new all-time highs on Friday. Good looking pattern here, kind of putting in a higher low from last week's action, rallied up to the top end of the range, consolidated for 4 days, and then started to close strong on heavy volume. So XLY getting a close up here and looking pretty strong and fairly pent up. It's not too overextended like some of these other markets. And last but not least, if we look at XLP, consumer staples, we do still have a position here. I've had this position on for a long time, and we own the XLP outright, the ETF that we're looking at. So I do have a long position here, but this has been fueling up sideways, and it's back to the top end of the range. It's been failing in the lower 60s here since mid to late April, and we'll see if this third time is a charm. It is working itself back up. MACD moved into positive territory, uptick in volume here on Friday, so we'll see if consumer staples can start to break out and start to reclaim and get back up to the prior sort of year-to-date highs. So that's it. That is the full recap for this week. Got some mostly constructive action. The Russell 2000 continues to be a worry. But with the S&P 500 kind of holding where it is, that's constructive. Of course, one thing I forgot to actually touch on a specific basis, but you still have things like the TLT rallying alongside of this up market, right? You still have gold, which is rallying in top of a equity market that is also rallying. So you do have some mixed signals out there, of course, and you do have leadership narrowing, but from a trader perspective, there's still good opportunity, and I think benefit of the doubt still goes to the buyers at this point in time. So that is it for me. Thanks as always for tuning in and watching. Every Friday we do the long form market recap videos just like this. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great weekend, and we'll see you back here next week.